Mixed market closes on Monday after the WASD. Joining us is Darren Fry with Water Street Solutions. And Darren, probably the biggest surprise of the report was in the soybean category. That's not where I thought the fireworks were going to be, but a drop in yield and harvested acres. And what do you think here? Where did those production cuts come from?
Well, a lot of them came from out west, but we even saw Illinois participate in being down 1 bushel to 64 bushel yield here in the state of Illinois, and we've had some pretty good weather. So I think it was shocking to see the acres get cut. A lot of people, including myself, were thinking we'd end up with a few more bean acres after the wet spring we had up in the north, the northwest, the northern plains, upper Midwest. But that just didn't, shake out the way I expected. And then, of course, we've had some drier conditions here over the last 30 days, and I think that's really affecting pod and grain fill as we see maybe smaller beans coming out in some of these areas. So it was quite bullish, and the market responded accordingly today.
You bet. A big update, and what kind of follow through do you think we're going to see, and what upside potential do we have now in this market trying to work these numbers in?
Well, I think we have to go higher. We'll probably go up in that 1540 area. Wouldn't be surprised if we see a pullback before that happens, maybe to 1464, and then a move higher. But if we don't stop there and we challenge the old highs in place, there might be might have more stuff going on here than one would think, because we shouldn't be going back toward the highs given what happened earlier in the year, given how far we fell. But if the yields are bullish enough and there's any problems in South America, new highs could be in order.
And the corn market, we came in with yield about 3 bushels lower, but the market really kind of expected that. Ending stocks came in very close to expectations. I guess it was how we got there that was a little bit of a surprise, with the lower harvested acreage offset by the cuts in domestic demand, right?
Yeah, they did cut domestic demand, and we saw that not only was the yield down as we expected, but also the acres were down. And I think the biggest thing is corn probably would have been closer to unchanged today if beans wouldn't have been so strong. But the beans helped prop it up some, and I think the wheat being down was a little bit of a drag on it as well. And so when you look at wheat finishing lower today and corn finishing about 11 higher, the beans were really the workhorse of the group, up 75 cents.
So do small crops get smaller? What do you see here as we go into the October report? And how does USDA offset that then? Because they don't really have much wiggle room now on these domestic demand cuts.
Yeah, I would say it'll come off of exports, and we'll see maybe more competition from Black Sea if things go well there, as well as South America. But small crops get smaller, and I would expect that. I'm not sure the acres are going to change much more. That was a big jolt to the market today. But I do think that the bean yield maybe could come down a little bit more. They maybe dialed a lot of that in already, but definitely the corn yield could edge lower. I think ear weights are a concern here as we move forward, especially as a lot of the corn fields are still trying to finish up. And we know that last 10 to 15 days is important for packing weight in. So under a drier finish, we could see lighter ear weights as we move forward.
So do you see a lot more bullish upside here in this corn market? Do we get above 7?
I think we could push up to 704 to 716. That's where I think you'd run in a lot of resistance. If we go much higher than that and we head toward the old high at 766, again, like soybeans, we could be firing this market up for a lot higher prices. And I'm not saying that's impossible. I'm just saying that'd be rare given the time of year we're in.
The other surprise was cotton, where we saw a 1 million bale increase in production. And why was that such a surprise, and where did it come from?
Well, I think it was just increased acres. A lot of those acres did not show up when the FSA got their reports in. They changed them here on the September crop report, and the market didn't believe it, though. I think a lot of those additional acres got abandoned. We know abandonment rates were really high in Texas, as they've had a severe drought down there and just wiped out a lot of those cotton acres. So the market was down hard, but came back, finished higher, and probably cotton has more to go to the upside if the market does not believe the increase there in the production.
Yeah, hopefully that's the case. What about the wheat market? Domestically, USDA left ending stocks unchanged, but we did see an increase in world ending stocks. But that market just cannot seem to get going here, even though it looks like there are some bullish factors that are still underlying this market.
Yeah, it really has struggled. I mean, it's the most oversold market. Corn and beans didn't sell off like wheat sold off. And wheat sold off the whole time. There's still consternation around whether a corridor would get opened up. And now that it's opened up and there's some shipments, we just don't see wheat having a lot of life more than 1 or 2 days up, and it takes it all away again. And today's, really neutral report, but bearish in the world numbers, really left wheat thinking, wow, do I need to go up and follow corn and beans or head lower again? And I do have some counts that could give us new lows in wheat. I'm bullish wheat, but maybe we got to make one more new low first, and then we can go. But yeah, wheat is a dog for sure.
Yeah. Cattle market split. Feeders under pressure, obviously, with the higher corn, but the live cattle futures from a technical standpoint have looked very, very good here. Is that market going to be able to keep going?
Yeah, a lot of people would say yes, and I think we do have tightening supplies coming into the end of the year, and so those are bullish. You usually turn the cattle up in October, but you do have these bearish headwinds with the economic woes that the world is facing, and we'll have to see how those inflationary numbers come out tomorrow and how the stock market reacts. But if we do see us, pull down in the macro picture, you could pull cattle with it. I think this 152, 151 area of December is really important. We haven't been able to get through it. If we get through it, then we have the ability to seek higher ground. If we stop there, we could have a washout coming in cattle, even though fundamentals are quite favorable.
Sounds good. Thanks so much for joining us. That's Darren Fry with Water Street Solutions.